Hi friends, very good evening all of you. Welcome back to CAP classes. When you're studying auditing, any chapter you randomly take, there are certain phrases which will literally run behind you or make you run behind them or haunt you literally if you do not understand the meanings like true and fair, materiality, misstatements, risk of material misstatements, financial reporting framework, isn't it? So in chapter 1 itself, you have come across something that the objective of the auditor is to express an opinion, to give a report on the financial statements. And in that 2, 3 parts, whatever we report on, one major part is to give a reasonable assurance whether the financial statements are free from material misstatements. Okay, so and in third chapter, you might have come across in fourth chapter you might have come across risk of material misstatement, which is actually continuation of what you have studied. So now in your notes put the heading risk of material misstatement. Risk of material misstatement. To understand this particular phrase, you need to break down it into 3 parts. Risk of material misstatements. First one is what is a misstatement? 2, when do we call it a material misstatement? 3, what is the risk of material misstatement? 4, how this will affect the audit risk. So, risk of material misstatement, there are 3 levels. Step 1, what is a misstatement? Step 2, when do we call that misstatement a material misstatement? Step 3, what is the risk of material misstatement for the auditor? And then the risk of material misstatement, that might be split into 2 components: inherent risk, control risk. All these things we'll discuss later. In this particular lesson, we are focusing only on what is a misstatement. Okay, now let us read and then I will explain you what it is. Okay, it is a simple concept. Now, misstatement refers to a difference between, okay, there are 2 things, 1 and 2, and there is a difference between this 1 and 2. There is A, there is B, and there is difference between A and B. There is A, there is B, and there is a difference between A and B. Now, what is A? The amount, okay. Classification, okay. Presentation, okay. Disclosure, okay. Now the student says, Pavan sir, I am remembering something. What? In accounting standards, in the introduction, my accounting teacher told accounting standards will help us. Our accounting standards deals with recognition, measurement, presentation, disclosure. Is it something like that? Obviously, yes. So what is the amount of an item? What is the classification of an item? How the item is to be presented? How the relevant information is to be disclosed? 4 things: amount, classification, presentation, disclosure. Okay, very good. Of a reported financial statement item. That means from whatever the management has given in the financial statements. Let me put it in simple terms. Take balance sheet of the company, randomly go to a line item. Take balance sheet of the company, go randomly to a line item. Take P&L of the company, randomly go to a line item. Okay, so in P&L debits, there are 20 items. Randomly put your finger on one particular line item and say, Pavan sir, depreciation. Okay, very good. Pavan sir, income tax. Okay. Pavan sir, rent. Okay. In case of balance sheet, Pavan sir, computers. So in under property, plant and equipment, company has computers. Pavan sir, this is the line item I have selected. Okay, very good. That is financial statement item reported by entity. Okay, what is the balance of computers they have shown? Pavan sir, computers they have shown 8,25,000 rupees computers. Pavan sir. Okay, very good. That is financial statement item reported by entity. Okay. That is the amount they have shown. Okay. That is how they classified as a non-current asset, as property, plant and equipment item. Okay. So they might have given some disclosure information about that computers. Okay, very good. So 8,25,000, they classified it so and so, they presented it so and so, and they've disclosed some information about that particular line item computers. Okay, this is A. B, the amount, the classification, the presentation, the disclosure. Same 4 items. That is required. Oh my God. For the item to be in accordance with applicable financial reporting framework. What is in accordance with applicable financial reporting framework? That means as per Companies Act Schedule 3, if it is a company, as per accounting standard, if it is applicable. Okay. So now you are thinking of how this particular item should be shown as per accounting standard. How this particular item should be shown as per one, Schedule 3 requirement. What is the amount to be shown as per financial reporting framework? What is the amount shown in company's financial statements reported? How that is to be disclosed? How it is disclosed? How that is to be classified? How it is classified? How the information is to be presented? How it is presented? So that means actually, A, how the company has done. B, how it should be done, how it is required to be done. If both are same, there is no misstatement. If both are not same, there is a misstatement. Pavan sir, I followed accounting standard, Pavan sir. I followed recognition measurement principles as per accounting standard, Pavan sir. Then computers should be 8,25,000, Pavan sir. Very good. Excellent. Now look at the financial statements, how much they have shown. Okay, Pavan sir. Pavan sir, in balance sheet, they have shown 8,25,000, Pavan sir. How much it is to be shown? 8,25,000. How much it is? 8,25,000. So there is no misstatement. Okay. How that is to be shown? As a non-current asset. How it is shown? As a non-current asset. There is no misstatement. What is that? PPE. What is that shown as? PPE. There is no misstatement. What are the disclosure informations to be given as per accounting standard 10? Pavan sir, these 4 disclosures have to be made. Now check in notes to accounts whether that 4 disclosures are made. Pavan sir, they have done all the 4 pounds. There is no mistake. Are you understanding my point? So how it is to be shown, whether it is shown in the manner or not. So you take amount, measurement, the classification, presentation, disclosure. These 4 things, how they are required to be reported, how they're required to be given, and how the management has given that actually in the financial statements. If they are same, there is no misstatement. If they are not the same, then there is a misstatement. Now, think about it. You have followed accounting standard measurement recognition principles. And based on your calculations, based on the accounting standard, when you followed Companies Act, when you followed accounting standard, it is 7,20,000. Okay. Now open balance sheet. How much they have shown? Pavan sir, they have shown 8,25,000 pounds. So is there a difference between how much is required to be put and how much is put? Yes, Pavan sir. It should be 7,20,000, but it is 8,25,000. Is there a difference? Yes, Pavan sir. That means, is there a misstatement? Yes, Pavan sir. What is the amount of misstatement? 8,25,000 is shown, 7,20,000 is to be shown. So the difference is 1,05,000, correct? Now, for this particular company, whether 1,05,000 is material amount. Oh my God. Then it is called material misstatement. You understand? What is the risk of this material misstatement? Why this misstatement has happened? What are the intentions of the management in doing so? Was it an error or is it deliberately done? Is it a fraud? Is it with an intention to deceive, the readers of financial statements? Is it with an intention to inflate the assets to show more net worth or probably get more loans or with some other intention? Why this happened? All these things we'll dig later. So in understanding audit risk of material misstatement. In understanding risk of material misstatement, material misstatement. In understanding material misstatement, misstatement. Misstatement, material misstatement, risk of material misstatement, audit risk. So this is step one. You understand it? This is misstatement. So simple. What is a misstatement? It is a difference in the balance. It is a difference between, that could be you are looking at an amount, or you are looking at classification, you are looking at presentation, you are looking at disclosure. For the sake of ease, I'm taking amount. How much it should be, how much it is. If there is a difference, then it is misstatement. Simple. You understand this? Clear? Is the concept clear?